Hey gang, it's Friday, July 10th. Jacob, Nate, and listeners, welcome to Behind the Numbers and eMarketer podcasts. I'm Marcus, and join me for today's conversation. We have two AI experts, Analyst living on the left coast, Jacob Bourne.
Hey Marcus, happy to be here today.
Hey fella, thank you for being around. We're also joined by Principal Analyst living on the right, Nate Elliott.
Aye up, Duck.
Oh, what do we have there?
Oh,
What just happened?
Just a bit of Midlands.
That's Midlands chat?
That's you tell me.
Well, no, it's what I tell you. But Midlands is quite a big area. That's where I'm from, guys. That's why we're talking about the Midlands. It's the middle part of England. I am from the East Midlands, so maybe it's West Midlands chat. Have you been watching Love Island? Is that where this has come from?
No. I just been talking to English people.
Oh,
Just to clarify, is this the fact of the day, Marcus?
it's not the fact
It's the
of the
fact
day.
of the day.
All right.
Today's fact of the day. Marcus is from the East Midlands.
I am. It's a terrible fact of the day, although most of my facts of the day are terrible, so it's in keeping with that. Today's real fact. The sheer scale of Alaska. So, Alaska is massive. It's 20% the size of the contiguous US. So 5 Alaskas would make up America minus Hawaii, which is crazy in terms of the size, the area. Alaska's 8 national parks make up about 60% of the total acreage of the entire US national park system. However, they don't have the most national parks. California has 9, so 1 more. Their total acreage is just 6 million acres compared to Alaska's 32 million. Alaska's largest park, Wrangell St. Elias National Park, 13 million acres, is double the size of all of 9 of California's put together. Have you guys been? I want to go.
Yeah, it's on my list. It's on my destination
list.
In part
Elliott.
because of those numbers, those impressive numbers that you're citing.
Yeah. Nate, how about you?
I have never been. I'd like to go. Yes, it is massive. I'm curious how much larger it is than Britain or other smaller countries.
You could fit the UK into this national park, I believe.
Yeah. Okay.
and have room to spare.
And have room.
Yeah.
And maybe squeeze in a bit of Ireland as well.
Easily 2.5 Texas is Alaska, I believe. The National Oceanic and Atmospheric Administration, NOAA, NOAA, includes all the intricate shapes of islands, inlets, sounds, and bay shorelines, putting Alaska's coastline at 34,000 miles. That's like driving back and forth across America 6 times.
Yeah.
Good God, what's going on up there?
That's a lot. I mean, perhaps the most notable thing in all of that, though, is that there's a park called St. Elias, because the man who invented what we now know as a marketing funnel was named Elias St. Elmo Lewis, which is not the same, but has some of the same words.
Which is why I picked it. No, it's not.
Of course.
Today's real topic. Good pivot. Welcome to the MANGOS era. AI's biggest players choose their lanes. Ryan Mack and Lauren Hirsch of the New York Times note that 25 years ago, roughly, Adeo Ressi, former college roommate of Elon Musk's, begged the tech entrepreneur not to start a rocket company. Mr. Musk had just made millions from the sale of PayPal, which he helped create, to eBay. He and Mr. Ressi were looking at ways to send terrestrial plant life to Mars. They had a $50 million budget, which wasn't enough to build a rocket. So Mr. Musk said, I'm going to build one myself. Fast forward to SpaceX's debut on the stock market as the world's largest IPO. The rocket company, now valued at $2 trillion, has launched hundreds of rockets into space, operates a dominant satellite internet service, Starlink, and oversees Mr. Musk's AI efforts and social network called X. The company's IPO was so huge that Mr. Musk became the world's first trillionaire. Side note, this should have been my fact of the day. The article points out that when oil tycoon John D. Rockefeller's fortune was at its height in 1937, his $1.4 billion net worth was about 1.5% of US GDP. University of Chicago economist Stephen Durlaff estimates Mr. Musk's net worth is now the equivalent to 3% of US GDP. And he has 3 times as much money as the second wealthiest person in the world, Google co-founder Larry Page. Good God. Anyway. SpaceX raised $75 billion from its offering, more than a combined amount of all the US IPOs in the past 2 years, says Renaissance. Renaissance? Either way, capital. Zooming in, guys, on the AI part of SpaceX. Earlier this year, it acquired Musk's AI startup XAI. SpaceX has plans to expand its data centers on Earth, develop AI microchips, and launch what it calls orbital AI compute infrastructure, data centers in space. Jacob, I'll start with you. What does this SpaceX IPO say about XAI's place in the AI race? Oh,
Yeah, well, I mean, even before the IPO, I think XAI, its frontier models had largely, closed the gap with, competitors' frontier models in terms of performance on many metrics. So I think this IPO really signals that XAI, folded into SpaceX, is just another very capital-hungry AI company. It just needs a bigger balance sheet to, fund that capital hunger. And so the move itself, I think, is a kind of a double-edged sword for XAI. On the one hand, it now has access to SpaceX's, or full access to SpaceX's resources, its clout. And I think, the downside is that XAI now is part of SpaceX's lack of profitability story. And so I think that kind of amplifies the profitability question that's at the heart of the AI sector right now. Now, I think a big part of SpaceX's current valuation is tied to this notion of what you talked about, Marcus, this outlook that it's going to launch a bunch of AI data centers into space. The problem with that is that the technical feasibility of that being more efficient than Earth-based data centers hasn't been proven at scale, which makes SpaceX a very risky investment. And we're seeing that reflected in the sort of the aftermath of the IPO.
Yeah, Nate. Ryan Mack of the New York Times is saying investors they're betting on the future. They're not betting on the current business performance, rather Musk's promises of what the company will do. So Jacob kind of outlined what their plans for AI might be. What do you make of what this IPO says about AI's place, XAI's place in the AI race?
I'm not sure it says a whole lot. I mean, as Jacob pointed out, this is just a very small part of a much larger company. And even if you look at the quite funny total addressable market calculations that they put into their securities filings, the stuff that looks like XAI is maybe 10% of the TAM that they're talking about. So looking at this entire company and its valuation and trying to understand what that means about XAI and the AI markets, kind of like looking at McDonald's revenues and trying to figure out what that says about salads. It's in there somewhere, but it's not why anyone would go and spend money there.
So how much do you guys think that this XAI is linked to SpaceX? Like if SpaceX doesn't do well, is that a referendum on, like, is there a world where XAI does very well, but SpaceX is actually struggling? Do we think?
I mean, I think part of this folding XAI into SpaceX is part of Elon Musk's very long-term vision for how AI and space exploration are going to be very closely linked together. But that's a very distant vision. And in the near term, I think that the fundamentals of each SpaceX and XAI are very different. And so I don't think that, I mean, XAI is it's a consumer-facing chatbot company. SpaceX is a rocket company. So I think that there's a pretty significant financial divergence there. But I think what I foresee is that XAI's performance is going to increasingly be dependent on SpaceX.
The books for SpaceX, just to stay on SpaceX for a second, we'll get more into the AI part in a second, but the books don't look great. Jim Chanos, founder of investment company firm Chanos and Company, they predicted the 2001 collapse of Enron. Was concerned about their finances, said they're losing $4.3 billion or did in Q1, spending so much on AI development. Revenue is about 5 billion and growing, but their revenue is 10 times smaller than Meta, despite being valued at more than Meta. However, some very optimistic outlooks for how much they could make. Goldman Sachs, who did help SpaceX with their IPO, told a potential investor that it can expect SpaceX's total revenue to reach nearly $500 billion in 2030. That's up from $20 billion last year. Morgan Stanley, also working in the IPO, said SpaceX's revenue would hit 3.5 trillion by 2040, according to the Wall Street Journal. And the chap who's part of the Big Short book and movie, Michael Burry, hedge fund manager, investor, he noted that the S1 suggests, he says nothing in the S1 suggests it's worth $1 trillion, let alone two. A year ago, it was valued at 4 to 5 times less than what it is right now. So it's just really hard with XAI being folded into SpaceX, but then also with this very, I say inflated valuation to figure out what's going on exactly with AI and the AI ambitions.
Yeah. I mean, if the AI data center in space bet pays off, then SpaceX and XAI by proxy will be extraordinarily valuable.
Valuation likely to regulate itself over time. JP Morgan analysts were saying that recent average IPO share price increase stood at 32% after day one of trading, but down 26% after 12 months. So expect it to come down. They did really make a big AI move post IPO. The company bought Cursor for 60 billion, AI powered software development platform and coding assistant. Any thoughts on that at all, or is it too early?
My thought is just that, in terms of examining or quantifying the ROI on AI so far, I mean, the code development use case is the one that has sort of the clearest numbers to back that notion that, that all this spending will pay off. Even then, it is a little bit fuzzy, but I think that is, what that acquisition is about, is that this is, coding, software development, app development is the most clear cut, bull case for AI. AI's payback.
Yeah.
Right now.
John Rowich and Jeff Brumfell of NPR writing that SpaceX's IPO is the first of 3 big tests of investor appetite for AI-related tech companies. ChatGPT maker OpenAI and Claude maker Anthropic have both filed paperwork with the SEC, signaling intent to list shares. Analysts say it could happen this fall. Nate, why are so many AI companies racing to IPO this year?
Because they're burning money at an unconscionable rate and they need to find new sources of capital. I mean,
need money yesterday.
We've never seen this kind of CapEx spend. It is absolutely phenomenal how much money these companies are spending. And almost equally phenomenal is how little money they're making to help them keep spending. And so OpenAI in particular has tapped literally every source of private capital it could find anywhere on Earth. And the next source of capital is almost certainly going to be the public markets. Anthropic has also raised a lot of private money, and its next best bet seems to be going to the public markets as well. Both of these companies are spending in preparation for a future in which AI takes over everything and therefore is a wildly profitable and successful business. But that's not where we are right now. And if you believe that vision of the future, then these things could make great investments. This category could be a great investment. But you have to believe that version of the future. You have to believe that the specific company you're investing in is likely to win in that vision of the future. And you have to hope that even if AI does take over the entire economy, that the amount of revenue that will flow to the AI companies will justify and pay back the amount of spending that they're doing right now to try to win. And it's not clear that any of those things will be true. It's not clear that AI will actually take over the entire economy. NVIDIA's trying to make sure it does, but that's not clear. It's not clear whether the 2 companies that have confidentially filed for their IPOs are going to be winners in the space. And it's not clear that any company, even if they are the big winner in AI, will be able to justify with revenues 5 or 10 years from now the amount of money that they're spending today and will have to continue spending to become leaders in the space. So this is all an enormous bet. And it's an enormous bet that requires a lot of capital, and they're just looking for capital in all the places they can. And public markets are a big place to look for that money.
Yeah, Jacob, to Nate's point, they need money. Also, Liz Lepato of The Verge was saying that going public first means that you get to scoop up the better investors. So maybe that's why there's this race to IPO this year. But I want to throw this at you because touching on what Nate just kind of ended with, which is from the New York Times saying, whilst AI is only one component of SpaceX's business, how SpaceX fares among investors will be a crucial gauge of how the average person feels about investing in the public offerings of other AI companies that are believed to be far from profitable. Do you think that this IPO from SpaceX is somewhat of a bellwether in terms of what we can expect from the other companies this year, OpenAI and Anthropic?
I mean, I think it has a lot of ramifications, yes. And going into the year, there was a lot of, talk about how 2026 would be this blockbuster year for IPOs. But I think because of all the things that Nate talked about, and because of how things went with SpaceX's IPO, the debut was very strong, and then things came crashing back to earth. I think that now we're looking at less certainty as far as subsequent IPOs this year. For instance, OpenAI is considering delaying its IPO to 2027. I wouldn't be surprised if Anthropic is doing the same. Cerebras, AI chip company, also had a big IPO and somewhat of a similar outcome to SpaceX. Strong start, and now it's seen a lot of stock volatility, and most recently a plummet in its share price. So I think that there was this IPO race going into the beginning of the year, and then there's just been more talk about an economic reckoning for AI. I think the questions about whether this all pays off are getting harder to answer, and so that has really dimmed the outlook for this really being the blockbuster year for IPOs. So I think part of that is SpaceX as well.
Mr. Rowich and Mr. Brumfell of NPR writing that all three companies, SpaceX, Anthropic, and OpenAI, they're huge, and that AI is certainly taking the world by storm. But the big question marks hang over future profitability. To date, they have been burning cash, as Nate was saying, to develop AI and subsidize usership. Mr. Rowich notes that the public listing of shares by SpaceX and later Anthropic and OpenAI will open up these companies to scrutiny that, as private firms, they have not yet faced. Listed companies must file public quarterly and annual financial reports and more, giving investors a look under the hood. Song-Yi Yoon, managing partner at Principal Venture Partners, says these IPOs are a sobering moment. Early investors like venture funds buy into the possibilities and promise of startups and new techs like AI. She says the public market places more value on profits and practical business models, and at present the public has limited ability to assess these companies' profitability. Nate, what will the AI world look like post IPO of these three giants? Better for business or shareholder distraction?
I'm not sure it's going to be better for business. I mean, listen, they're going to have an infusion of capital that they need to spend to keep up with their frontier models and data centers and all the other things that are required to really compete in this marketplace. But they've shown that they spend through that money just unbelievably quickly. I mean, Anthropic in particular confidentially filed for its IPO less than 72 hours after closing a massive round of private financing. The hunger for money is almost endless. And as soon as these guys get through an IPO, I imagine we'll start hearing about secondary offerings and returning to public markets for even more revenue, even more cash injections. So the money's important. They can't continue to function without the money because they are nowhere near making the money that they need by selling their products and their services. Having said that, all of it, as you point out, comes at an enormous cost. I've been at a technology company that was private and went public, and the amount of distraction, not for investors, but inside the company is phenomenal. Employees can lose their focus. They both because they're pulled in a lot of new directions, especially those who work in any field that is close to the new reporting requirements that are put on public companies, but also you sit there and watch the stock ticker go up and down. And if you're on the kind of roller coaster that SpaceX's stock was on in the first week or two, then you really do spend a lot of time focused on it and maybe less focused on the work that you should be doing.
Yeah.
There's a lot of distraction for everyone. And while they need the money and they have to do this because they can't continue to function without new investment, it's a problem. It's going to be a challenge for them in terms of keeping everyone focused on continuing to build good products.
Yeah. Jacob, what do you think? Better
Yeah,
for
I
business or
mean,
shareholder distraction?
I'm going to go with shareholder distraction, at least in 2026. I mean, I think that the IPO doesn't fix the underlying economic problems for the AI trade. It does bring in more avenues for cash, for fundraising. It sparks, investor interest. It helps these companies tap into the enthusiasm among the, retail investor class. But that's a bit circular as well, because a lot of those retail investors have gotten into the market just because of AI. And so I think the growth trajectory needs to prove itself. A lot of these companies have long-term missions and a vision for what they're going to do with the technology. And I think that the short-term quarterly optics game that they now have to play can be a distraction from that.
Yeah.
And I think especially for a company like Anthropic, whose mission is really tied to this AI safety work.
Yeah.
That could really come under threat from market pressure. So we don't know how that's going to play out.
Let's end with mangoes. Why wouldn't we? First, it was FANG companies, Facebook, Apple, Amazon, Netflix, and Google, the rapidly growing US tech stocks around 2013. 10 years later, they morphed into the Magnificent Seven: Meta, Apple, Amazon, Alphabet, Microsoft, Nvidia, and Tesla. And now the new acronym is a new acronym in town, the AI giants acronym MANGOS: Meta, Anthropic, Nvidia, Google, OpenAI, and SpaceX. My question, gents, is how much of these, uh, um, so these are the six AI giants, how much are they actually competing with each other? Because it feels a lot like they're choosing their own lanes. So like Meta's using AI, and there's some overlap. Maybe there's a lot of overlap, but it feels like Meta's using AI to engage social network users and sell ads. Anthropic's focused on AI enterprise tech. Nvidia makes chips. Google AI search. OpenAI, who knows, kind of everything. SpaceX leasing computer power to big AI developers, and XAI has chatbot Grok. They're doing other stuff as well, but is it fair to say, Jacob, I'll start with you, that actually these companies aren't competing as directly with each other as we might think?
My take is that they're competing directly just because of the sheer scale of the AI stack. Yeah, certainly we're seeing some pressure to be in a certain lane. But I see it basically as a racetrack with no lanes, and there's a lot of weaving around going on. So basically, you have a situation where, I mean, you have NVIDIA, for example. Yeah, I mean, it started out as, a chip company. Now it's, investing heavily in a lot of other things, including open source model development. And that's just one example. You have Google, AI model search giant. It's not only has it been investing more heavily in building its own AI chips for internal use and for customer use, but now it's eyeing actually taking NVIDIA, competing with NVIDIA more head on the AI chip trade. SpaceX, I think, is a great example. I mean, it's in all kinds of lanes now, including with, selling excess compute power to competitors, and of course the AI data center bet.
Mm-hmm.
I think Meta is one interesting category too, where yeah, certainly there's been its lane of social media chatbots, and of course integrating AI into its own advertising stack. But I think that its recent launch of AI mode for its social media platforms kind of shows that it's not even trying to hide that it's competing directly with Google on the AI search front. So and then of course there's there Anthropic and OpenAI similarly. Earlier on it seemed like, okay, OpenAI was really courting the consumer market and Anthropic was courting the enterprise market, but now they're both courting all markets simultaneously. So I really think that as much as there's limitations to how many lanes they can each be in, they're all pretty much squarely competing with each other, because I think they fear that they will come down to just one or two dominant players for the entire stack. And they want
Nate, what do you think?
Yeah.
I think it's all a bit silly. I think mangoes is a bit silly, and everything Jacob said is correct. But to focus on the mangoes acronym and to focus on whether they're competing or staying in their own lanes is to force your view of these companies and the industry exclusively through the lens of AI. And make no mistake, these 6 companies are all very heavily involved in AI, and they're all spending unbelievable sums of money on capital expenditures around AI. And also make no mistake that most of these companies have almost no revenue from AI, and most of these companies are not AI businesses. They're businesses that do other things. Google makes all of its money selling advertising and hardware. And we're not talking about AI chips and make a little bit from that. We're talking about smart home speakers and mobile phones. Meta makes all of its money selling advertising, and I mean all of it. The AI revenues at Meta round to zero. SpaceX makes all of its money launching things into space. The AI portion of its revenue is maybe 1/6 or 1/7 of the business, and the other 5/6 or more of the business come from launching rockets into space. You can look at the market, say everything is about AI, and come up with a list of the biggest companies spending the most money in the space, and that's what the people who talk about mangoes are doing. And you can talk about whether they compete with each other, but at the end of the day, you know, Alphabet made $250 billion last year just from search advertising, not from anything else that it does, just from search advertising.
Right.
The entire AI industry won't come close to that number for several years. And that's one company and one line of business. These are not AI companies. They're companies that do other things incredibly successfully and that are investing heavily in AI, hoping that it becomes the next big thing. But it's asking whether they're competing with each other misses the point, which is they're different companies that do different things, and they're all hoping that AI becomes a big part of their future. And right now, it's simply not what they do.
Yeah, I mean, I think the caveat there for Microsoft, Amazon, and Alphabet is just on the cloud front. I mean, their cloud business growth from those 3 companies is really coming from the AI spending of other AI companies, and so it's circular. But they are building, gaining meaningful revenue from their AI cloud division. So that's, I think, one area where I would say is an exception to what you're saying.
Yeah. Yeah, that's a good point. And Nate, I take your point on the money side of things. I think the guy who came up with this was thinking these are the companies that are shaping the AI world we live in. So of all the money that's spent on AI, these guys are taking up a large share of that. But to your point, yeah, that is a good one. They're not AI companies. They're companies who are
FANG
using
at least
AI.
with the companies with the biggest revenues and the biggest consumer footprints, and the mangoes doesn't fit either of those descriptions. Next year we'll be talking about coconuts or papayas or something else, and I think that one's covered, but sure.
All right, fine. If it's going to be, it has to be a pink lady. I don't want to hear anything about Granny Smith. Okay.
I think if we have another acronym by as early as next year, I don't think it's going to stick. That's my prediction. No one's going to remember all these acronyms.
Marcus, you're a pink lady apple guy?
Yeah, absolutely.
No, jazz apples all the way. Come on.
Honeycrisps, guys. Honeycrisps.
Oh, Honeycrisp has gotten bland.
Really?
Second tier apples.
Yeah. They've gotten a little bland for me. Jazz is the way to go.
That's what we've got time for this episode. Unfortunately, thank you so much, guys, for hanging out with me today and talking about fruit. Thank you first to Jacob.
It's been a pleasure, Marcus. Thanks so much.
And thank you. And of course to Nate.
Thank you very much, sir.
Thank you, sir. Thank you to the production crew, Lance helping us out with this one, and to everyone for listening in. For Behind the Numbers, eMarketer podcast, follow and subscribe to hear about new episodes and leave a rating and review if you've been enjoying the show. We'll be back on Monday talking about what Fox buying Roku means for Fox, for Roku, and for everyone else. Not everyone else. I haven't got that kind of time.